Good morning, everybody. This is Yohay Elam of Forex, French and Market Movers doing the daily morning show for FX Street. Today is Thursday, October 22nd, and we're here at the most important day of this week because it's ECB day. We're going to hear from Mario Draghi and, of course, cover everything that's going on in markets. As usual, talk about what happened, what will happen next, examine some charts and levels, and also, of course, looking forward to your questions. So if you can't see the chat under the video, this is the address, tlk.io/fxstreet-forex-live-video. So let's start. Let's start first with what happened yesterday. Yesterday we had a lot of action in the Canadian dollar. So the Bank of Canada decided to lower its forecasts for growth for this year, the next one, and also 2017. On one hand, it lowered the growth forecasts. On the other hand, it remained optimistic. So in the press conference by Stephen Pelosi, the governor of the BOC, he was optimistic. He talked about improving prospects, but on the other hand, they did lower forecasts, and that had a negative impact on the Canadian dollar. Another thing that had a negative impact on the Canadian dollar was the rise in oil inventories. This wasn't totally unexpected, because we had some figures from API beforehand, but all in all, this is the season, later is the season when oil inventories grow, so we're already flooded, already at record highs, and another jump of 8 million means too much oil in markets, lower oil prices, lower prospects for the Canadian dollar. So before we move to the next events, let's see the move on the Canadian dollar, right here. So we have, this is $1. Of course, we'll talk about that more in detail. So this is what we have here in the Canadian dollar. We had the pair flirting with 130 before the event and then moving all the way higher. You can see this move higher. It broke above resistance at 130.70, which was the peak last week, and made it all the way to 131.44, even 131.50. Now it's 131.26, stabilizing. This is the line I've mentioned, 131.20. But anyway, we had a clear break above 130.70. The next levels above are 132.20 and 133, which was it's already high levels. All in all, the Canadian dollar is backtracking. Dollar CAD is making its way back up. Maybe the 4-hour chart would be better. So we had the big fall from 134.60 all the way to 128.20, above 600 pips. And one correction didn't work, and the pair continued falling. But now we're seeing, I believe this may be a change of trend because the Bank of Canada is lowering forecasts, and there's just too much oil in the markets. So that was yesterday was sort of the focus was on Canada. Okay, let's move back to the presentation. We also had during the night, Australian business confidence fell to 0 after 4 last time, but on the other hand, it wasn't all that bad because we had the non-mining sector showing some improvement, and that's good news for Australia, that it can move out of mining also into other parts of the economy. This transition, of course, is very slow. This kind of rebalancing, it goes hand in hand with the Chinese rebalancing efforts. So that's where we're standing right now. But this didn't help the Australian dollar because all commodity currencies are now sort of suffering under the US dollar, under some fresh strength of the US dollar. So here we had, yesterday during the show, we talked about this breakdown of Aussie dollar under uptrend support, this triangle right here. So we had to break lower. It was around 72.40 yesterday. Anyway, currently we're in lower ranges. The range this time is 71.82 to 72.40. What we've seen today, 72. I still believe it. I still believe that it serves as support. Okay, and further below we have 71, 70.40, 70, and of course the double bottom of 69.35, which we've mentioned each time on the show. On the top side we have 72.80 is still a battle line. I wouldn't call it resistance, and above we have 74. So we've seen Aussie dollar make a big correction if we look at the bigger scheme of things, but now it's beginning to slide back down. Okay, so let's see what other events we have here. Yes, this morning we had the Spanish unemployment rate. This doesn't have an effect on the euro, but it's at least good news for Spain. The unemployment rate fell from 22.7, I think. And let's look at the exact numbers to give you an accurate figure. Why isn't this updated right here? Sorry. Yeah. We had 22.2 last time. Now it's 21.2. You may say, okay, it's still terrible, and you'll be right, of course. It's still very high unemployment, but at least the direction is positive direction. 21.18 if to be correct. And it's good news that this country is finally seeing more employment, not exactly in the right sectors. This also means good political news for the current government of Mariano Rajoy, which faces elections in 2 months' time. I think it hasn't been such a good government, but markets, of course, want stability, so this is good news. Okay, so before we move on to other charts, to the euro, of course, let's see if you have any questions. Yeah, already quite a few questions. Good morning to Ross. Good morning, Jake. Good morning, Jack Sarweld. Let's start with the first question from Jake. Jake says, best bet for the day is sell euro dollar in the news. I am in Asia and already got a nice profit this morning because everyone had the same expectation. Looking forward to see what levels you're looking at, what has been priced in. Also, do you expect the dollar is rebounding via CAD and JPY? Dollar will surge against euro, drops tonight. Well, yes, we are seeing a stronger dollar across the board. I think it's a sort of counter-reaction to what we've seen in previous days. Of course, stronger against commodity currencies, with worries about China, with, of course, oil prices. That's the main thing. Regarding the euro, maybe it's already priced in. So I'll talk about the euro and the ECB in detail in a moment. We have another question from Jack Sarwald. What happened to the Aussie? When did they talk about a rate cut? Okay, so if we already talked about the Aussie, let's here's the chart of the Aussie. So talk about rate cut began about a week ago or a week and a half ago, when Westpac, one of the biggest Australian banks, decided to raise interest rates on mortgages. Okay, that's because of a change in regulation. Now, if the commercial banks make lending more expensive because of regulation, not because of the RBA, not because of monetary policy, that gives space for the RBA, for the central bank, to cut interest rates. So that's when the talk of interest rates began. I must say that when this talk first came out, we didn't see a good reaction from the Aussie, but this factor weighs on the Aussie, of course. This factor, and another factor today, is that there was some rumor that the Chinese government will stop supporting the stock market. Okay, so this also weighs on the Australian dollar, and the bigger thing in markets is China is slowing down and less demand for commodities, weaker Australian dollar, weaker other commodity currencies. Okay, so we had a different trend last week when commodities were going up. Now this week we're seeing commodities going down. Hope that answers the question. Good morning, Fedra. Now let's talk more in detail about what we had from what we're expecting from the ECB today. Let's see if I have a slide for that. No, but that's it. Yeah, so let's begin with the events. Just to mention, during the show, we'll have the UK retail sales. We'll talk about that when we get closer to the event. Of course, that's important for the pound, but big event for the day, for the week, I would say, is the ECB decision. So at 11:45 GMT, we have the actual decision. No changes expected. Okay. Lending rate, main lending rate is expected to remain at 0.05. The deposit rate at minus 0.20, a negative deposit rate. We already have a negative rate since June last year, June 2014. And the size of QE is expected to remain unchanged at 60 billion per month, running through September 2016. But the big question is, and we'll get some answers in the Draghi show at 12:30 when ECB President Mario Draghi faces the press, is what are the next steps in terms of QE and what are the forecasts? Okay, this is the big question. Currently, we have the ECB telling us back in January that it's going to buy 60 billion euros of bonds every month, it began in March and up to September 2016. That's a total of 1,140 billion euros worth of bonds. Well, other security as well, but mostly government bonds. Okay. Now, since then, the program is running very smoothly, no problems. They bought a little bit more before the summer, a little bit less in the summer. All in all, it's going on very well. But the results are mediocre, let's call it this way. So we still have a negative headline inflation rate, 0.1% in September. Of course, that's because of oil prices. And this base effect of oil prices is expected to continue for about 2 more months, no, not more. Because if you remember, the big fall in oil prices, it was a gradual fall, but the big shocker for oil prices came in late November 2014 when OPEC decided not to cut production, and then we had a bigger tumble down in oil prices. So by December, January, I believe that this base effect of oil prices will already have gone away. But okay, so if we don't look at oil, if we look at core inflation, which is not the ECB's mandate, but it still matters, and we have there only 0.9%, also very far from 2%. Okay, so it's not so good. And the prospects, the ECB already cut forecasts for inflation growth already back in September. It won't have new forecasts now, but it does have new data, and the data isn't so good. Unemployment went back up, and most importantly, inflation is still stuck. So they won't do any action today, but the big question is, will they hint about action in September? There are 2 types of action. One is easy to do. One is saying we will go beyond 2016, beyond September 2016. We'll go to mid-2017. We'll go to forever, as whatever it takes, whatever is needed. That's, of course, dovish, but I think that such a move is already priced into the euro. Markets are already expecting QE to go beyond September 2016. And in any case, it's only forward guidance, okay? It's only, we'll do whatever it takes. It still means they can cut it before, after September 2016. So it's just a promise, a future promise that can be changed, data dependent. Of course, they're not fully committed. They're only guiding the markets. A much bigger move would be an immediate move to show me the money, as they say, okay? To immediately change the program and to say, okay, from January, from February, whenever, from March, we're beginning to buy 80 billion of bonds per month, 100 billion, something like that. That would be a bigger boost. And as we said, we're not expecting anything now, but we are expecting some hints. So what I'm seeing, basically, base case scenario is the ECB Draghi hints that they could extend QE beyond September 2016. I believe that's already priced in. We could see the euro, of course, immediately fall on this move, but this, in my opinion, could be a buy opportunity, because if that's the only hint we get, it's already priced in. So the immediate reaction would be a wrong reaction, and then we could see the euro rise. Okay. If we do get a hint that they are already also ready to change the size to print more money every month, that's already a big deal. That could send the euro down towards the previous range of 111, 113, or even lower. Okay. I believe the chances are lower. And if Draghi is happy with everything that's going on, and I don't think he will, it's also a low chance, then, and he won't hint about anything, then of course I think euro dollar could go up, challenge 115 once again. So these are sort of the basic scenarios. Of course, there are many nuances. he could say one thing and then something to contradict it to keep markets a bit confused. But these are the basic scenarios in general. Hint about more action, but it depends what kind of action we're going to get. Okay, now let's, after this long preview, let's look at the chart of euro dollar and see that towards the event, euro dollar is weakening. Okay, so we talked in previous days about this kind of head and shoulders pattern, which was a bit shattered. This is the shoulder here above 113.40, the big head. Another shoulder here, 113.40, a dip to 113.05, and now we're seeing even lower levels. But all in all, I think we're still range trading. Support at 112.90, lower level so far 113.02, resistance 114, and then 114.60, which is still a very important line, double top in September and May, 1,000 pips above the March low. 115 is, of course, the big price above if we get a very hawkish sentiment. On the downside, 112.90 and then 112.15. These are the levels to watch. I believe that they will have some kind of breakout in euro, or at least we'll have a wider trading range. So for today, we have 50 pips of trading range. If we look also at the previous days, we have no more than 80 pips. In comparison with the previous weeks, we have a very, very calm trading environment for euro dollar. I don't like that. I like to see more action. And I believe that they will have at least more action, a wider trading range. Let's see what Draghi says. The ECB does not like to have a strong euro. A strong euro means that exports are less attractive. It means Volkswagen sales are already less attractive. But let's say Spanish wine, a better example, or an Italian car, or French cheese, or whatever you wish, is less attractive with a stronger euro. And inflation, which is the ECB's only target, basically the single needle in the compass, as Trichet used to say, and that's just currently too low, and we would need higher prices of imported goods due to a weaker euro to push inflation higher. So the ECB would like a weaker euro, but like everybody, I guess, they would like to talk instead of act. But talking can go only so far. So let's see what we'll hear today from Draghi. Another note, will be here on FX Street. We'll be covering the event. I'll be joining Mauricio, Valeria, and perhaps some others in covering the event. So you can see it also on Forex Crunch and, of course, on FX Street. Okay, that's the main event for today. Before we move to more charts, let's see, we have more questions. Good morning, everybody. Great to see many people here in the room today. Good morning, Zach. Good morning, Jake, once again. Good morning, Jack. So, I missed a few questions. So, okay. So, Jack Sarwild says, China just has to mess with everything like a Pessy sibling. Well, I think they're not just a sibling, it's the world's second largest economy. So they do have a lot of say. The United States buys lots of goods from China. Germany depends on Chinese imports of German machinery. So it's Australia, of course, is the most dependent country, such as Trump like to blame China for manipulating currencies, which is not always the case. So that's to your comment. Good morning. What is the best pair in euro to trade today? The best pair in euro, I would focus on euro dollar because I think we have some noise from other currencies. Also, euro yen could be okay, but I wouldn't trade euro pound because we might have some impact from the retail sales in the UK, and not commodity currencies because they're more affected by mood. So I would say euro dollar or euro yen. Good morning. Okay, Jake says, okay, good to know. Dollar was pushed by oil, I guess, or is it dropping due to anticipation of more QE, or both? What were you saying, that oil looks like a rebound that could be priced in? So regarding, yeah, dollar was pushed higher. I think it's more just new positioning in markets. Last week we had oil, we had commodity prices going up and the dollar going down. This week we have a correction. Figures in the US were also okay, so that also supports the US dollar. Regarding oil, I think oil is pressured to the downside because of oversupply by OPEC, oversupply by the US. Inventories are beyond capacity and oil is being flooded to the markets. Iranian oil is going to come online soon. So everything pushes oil lower. For a bit deeper look at oil, I suggest you go to tradingenergy.com. It's the site of my associate Lior Cohen, with whom I record the Market Movers podcast. And he has in-depth analysis of oil. Regarding what could be priced in, that Jake asks, I think that hints about more action in December in general about extended QE are priced in, but printing more money is not priced in. So that's sort of the short answer. A good morning to UK Kev. And Jake asks also, many analysts appear to think Draghi will talk down the euro. You have also stated that a few times. Do you still see it as the most likely scenario? Yes, I still see it as the most likely scenario. Last week we've seen that at the moment that euro dollar broke above this resistance line of 114.60, Ewald Novotny of the Austrian Central Bank went to the wires, even though his comment was a bit misinterpreted. Anyway, the ECB shut down the euro. Now, they usually don't talk about the euro that directly, but there's sort of, I believe Draghi will try to paint a more gloomy picture and readiness to act and sort of strong vigilance, and this could weigh on the euro. Yeah. Okay, so while we wait for more questions, we jumped over what we're going to have soon. Let's look at the British pound. British pound well entrenched in the range, 154.56. It fell to the lower end of the range. You can see 154, 154.10 has been the low. 154 is a very clear separator of ranges. Once we had a break above this line last week, we had the pair test 155, and now it's bang in the middle of the range. Let's put the 30-minute chart so we can get ready for the reaction. So in the last half hour, we're seeing, or the last, well, actually 2 hours, we're seeing cable grinding higher. Pound dollar is on the move higher. I might suspect there's a leak in the UK and we're expecting a good retail sales number. Okay, but let's look at market expectations. So here we have it. It's the FX rate calendar on Forex Crunch. Markets usually look at the month-over-month figure, even though year-over-year gives a broader picture, and they look at the headline number, not the core number. Okay, so in the UK, we're expecting retail sales to rise 0.3 in September after 0.2 last month. Remember, they're usually revisions, but they're less common than in the US. Year-over-year, we're expecting very strong growth. Instead of 3.7, we're expecting 4.8. Well, that's just another reminder that the UK economy is doing quite well. If we have such a year-over-year rise in the volume of sales, of retail sales, on core prices, which actually exclude only fuel here in the UK, in this figure, we're expecting month-over-month 0.3 and year-over-year 4.6. So more or less the same figures also for the core, not such a big difference. So these figures are coming out in about 5 minutes. Let's see if they'll be enough to send pound dollar out of the range. Okay, retail sales are important in the UK, even more, of course, in the US, but also here we're bang in the middle of the range. Let's see if we have a move out. The range is also easy, 154, 155. Okay, let's look at other events we have today. At the same time, at 12:30 GMT is a very busy time, very busy hour. We have jobless claims from the United States. This is a weekly release. We're expecting, last week it was excellent, it dropped all the way to 255,000. We're expecting some kind of mean regression to 265, and continuing claims are expected to remain, well, more or less the same, 215 to 218. Headline number of jobless claims makes a difference, but for euro dollar, it will be ignored because all eyes will be on Mario Draghi. So if you want a better reaction for initial jobless claims, it's better to look at dollar yen. Okay. At the same time, we have more data from Canada. Canada is very busy this week. We have retail sales from Canada. So we have retail sales from the UK and from Canada today. We're expecting retail sales to rise 0.1% month over month in Canada, and also the same scale excluding autos, excluding cars. Okay, so for those of you trading dollar CAD, jobless claims and retail sales in Canada, jobless claims in the US and retail sales in Canada are the figures to watch. And then at 2 GMT, we have existing home sales in the United States. Most of the market of houses is, of course, second-hand homes, not new homes. On the other hand, when you sell a new house, there's lots of additional activity around that: infrastructure, roads, schools, everything related to that. Anyway, we're expecting a small rise from an annualized rate of 5.31 to 5.38. This could have an impact. In the United States, we also have the CB leading indicator, and we have European consumer confidence, but today it's totally overshadowed by Draghi. So these are the events for today. Big event, of course, the Draghi show. Mario Draghi meets the press at 12:30 GMT. Let's just peek at tomorrow's event on Friday. Before the show tomorrow, we have a release of preliminary purchasing managers indices, or PMIs in short, at 7 GMT from Germany, then from France, then at 7:30 from Germany, and then at 8 for the whole Eurozone. Why are these figures important? Because they're forward-looking, because they are they sort of reflect what the most influential people in the economy, what purchasing managers see for the future. And also it's the flash figure for October, so it's very, very fresh. It, of course, includes in Germany the Volkswagen crisis. We'll see how that impacts the German manufacturing sector. It's important to remember that it's not only a huge company, but also that many other companies depend on Volkswagen for selling their parts in the supply chain. Okay, but everything depends on Draghi. If Draghi doesn't rock the boat, which is quite unlikely, then these figures will be more important. But if he says something big, then it'll be these figures will be overshadowed by Mario Draghi. Okay. Pound dollar extending its gains 154.70. It reached already 154.80. We have just 1 minute and a half to go. Let's just take a peek if you have more questions, and I'll take the question answered after the release of the retail sales. So, oh, I don't see any new questions. Anyway, you're welcome to ask further questions. We'll cover the release of retail sales in the UK. It's supposed to be an important event. So, as aforementioned, we're expecting gains 0.3, more or less. And we have less than a minute to go. And we have 154.75 before the publication. And let's see what happens immediately afterwards. So holding your breath, well, it's not that big deal, but usually it does have an impact. Okay, better than expected. Wow, much better than expected. Pound dollar is shooting higher, breaking 155. We have, okay, these are the figures. Retail sales month over month, we have a rise of 1.9%, and much, much better than expected, albeit coming on top of a downwards revision from plus 0.2 to minus 0.4. But first of all, the last figures have more impact than the previous ones, and the revision is relatively small in comparison to the previous, in comparison to the big jump. So bad revisions, but much, much better figures now. Also, if we look at year over year, we have, instead of 4.6 expected or 4.8, we have 5.9 gain year over year in UK retail sales. As I said, month over month, 1.9. Core sales, excluding fuel, we have 1.7%. Also here, there was a downward revision, a significant one, from plus 0.1 to minus 0.7, but the boost in September is much more important. Also year over year, no, sorry, it's the wrong figure for. And year over year for retail sales, it's 6.5. For core retail sales, it's 5.9. But most important figure, retail sales month over month, 1.9. Much, much better than expected, and much better than, certainly overcomes the downwards revision. So it's good news for the UK. We talked about this before. Look at the chart. This is the 30-minute chart. We had a cable move all the way from 154 to 154.40 to 154.70 before the release, and afterwards we're seeing a move all the way to 155.06 so far. That's the high. Okay, so still within the range. At the top of the range, we still don't have a confirmation of that breakout, but it's certainly a positive surprise. As I said, maybe some people knew about the surprise and didn't surprise them that much, because we saw the pair begin moving before. So we're saying buy the rumor and buy the fact, not a buy the rumor, sell the fact, because it was really an outstanding release, 1.9% rise month over month in the volume of sales, and year over year 6.5. Okay, much, much better than expected. So already we have some action today, and I'm glad to see it after a few boring days. So we have already some action this morning, with pound dollar jumping before the release and jumping afterwards, currently struggling with 155. Okay. More questions. Malcolm, Pan says, okay, I'll up 6.5 year over year. Thanks, Ben. Malcolm says, thank you. Yohay said that better figure is expected and possibly early begging to the move. Yeah. Leaks are not uncommon in the UK. That's just the way it is. Rumors, whisper numbers, whatever you want to call it. Good guesswork. Somebody reading the stars or the tea leaves or the coffee or whatever. I believe it's just a leak. And in many cases in the UK, we see buy the rumor, sell the fact. This time it was so good that we see extra buyers, extra bids coming in after the publication. Okay, so it's quite interesting to see that. Quite nice stuff over there. Yeah, but still, let's zoom out. Let's just not look at the buy the rumor, buy the fact, but the bigger picture. We're at the top of the range, still no breakout to the upside. If we do see a breakout, 156.05 is resistance, and then 157.20, but we might as well also fall back down into the range. Let's see how the pound is reacting against other currency pairs. So euro pound, also very significant response here, down to 73. The low so far was 72.94. 73 is support as we see it here, because it provided support for the pair early in the week. Resistance at 74 or 73.80 to be more precise. Further support at 72. Anyway, we're seeing the pound making gains also against the euro. And let's see the pound against your favorite yen. So we're seeing also here, very similar to pound dollar, we're seeing pound yen rising towards the top of the range that we've seen yesterday. And the day before, 185.50. I still see strong resistance at 186 because that was the high range that we've seen in September. Let's zoom out right here. So yeah, 186 was the support line of the high range back in September, and but now we're seeing it find resistance at 185.50. So if we cross this line of resistance, we have further resistance very close. Support is at 184.80, and then 183.50. High resistance at 188.10, which was the level seen in late September. Okay, so quite a lot of action here. Let's see if you have more questions. Yeah, Pan, good morning. Again, any insights into yen? Still expecting weakness, but seems very choppy. Yeah, it's very choppy. It loves the 120 level. Okay. So last week we've seen a drop 118.10, and then it rose all the way back up. Currently 119.66, and yeah, choppy is an understatement. Oh, sorry. Choppy is an understatement so far. Yeah, touching the 120 level. Everybody's waiting in Japan for the decision from the BOJ. That'll happen in 8 days. It's October 30th. Recent hints have been that the Bank of Japan is not eager to act. Not eager to act because it wants the government to do more, because TPP consideration, political considerations. Japan does not want to be seen as manipulating the currency. And there's a new inflation figure, as if there weren't enough already, called U-Tokyo, which measures inflation according to online figures, and it's released on a daily basis. And this figure, which is also watched by the BOJ, I think it's Professor Watanabe of the University of Tokyo, and he sees inflation as accelerating in Japan, contrary to official figures. So all these things support no action from the BOJ, and then dollar yen falling. But with lower oil prices, Japan can afford a weaker yen, and it'll of course boost exports. Anyway, we'll have more previews next week. Currently, the tendency is for a no hike. A no more QE, no action. That's a stronger yen. But a lot also depends on the Fed decision next week. Currently, it continues hugging 120. When it went out of range last week, all the way to 118.10, we saw it grind all the way back up. Okay. Another question. You think? Thanks. Pound yen hasn't broken 185.60, but hoping it will today. Yeah, if we have more good news in markets, then it supports pound yen, because now the pound has good news and it can continue rising. And if the yen is stable against the dollar, if we have okay or good news from the United States, then we could have a stable dollar yen, and then pound yen could continue higher. Let's just briefly touch on more currency pairs and then get to the wrap. It's been a busy show, because I'm glad it's been busy, because I'm glad for your questions, and I'm glad that we have action in markets. So Kiwi, New Zealand dollar against the US dollar, we've seen it fall from the highs of the resistance at 69. It broke below support at 67.40, found new support just above 67, actually dipped a bit below, sorry. Now it's 67.64, a bit of a recovery, but all in all, we saw milk prices falling in New Zealand and commodity currencies in general falling. So we're seeing a weaker New Zealand dollar in the last few hours. Things are improving. but not too much. We talked about the Canadian dollar. Dollar Swiss 96.10, grinding back higher thanks to the improvement in the US dollar. That 94.80 is support, 96.60 is resistance. Let's see if it continues higher from here. We're seeing Euro Swiss also, well, more or less in range, 108.65, trading in a lower range than last week, but still very narrow range. This pair doesn't move too much. And Euro Yen back down because the Euro is weakening and Dollar Yen is very, very stable. So we're back below the previous resistance line of 135.60. We've seen it peak at 136.40, 137 is high resistance, and 134.80 is support. Okay, let's just take a quick look to see if there are more questions. And no, okay, so I'll get to the wrap of the show. This is the busiest day of the week. So this is the wrap for Thursday, October 22nd. We have lots of action in markets, things are in the move, and high anticipation towards the big event today. Before the big event, the ECB, we had yesterday the Bank of Canada lowering forecasts, and despite optimism and the buildup in inventories of oil and the lower forecasts hit the Canadian dollar. Went out of range, dollar CAD broke higher. Also, other commodity currencies are a bit suffering. In Australia, that's a bit due to the fall in business confidence, but also about worries in China about the Chinese government stopping to support the stock market. I think these rumors are wrong, but anyway, commodity currencies are falling. So let's just take a look at the three commodity currencies. We have dollar CAD at 131.15, a bit below the highs, but still we see it. We see the break higher. Kiwi dollar at 67.60, a bit recovering, but still hit much lower than the highs. And Aussie dollar broke below the uptrend support and struggling to hold on to 72. Now, the big event for today is the ECB. At 12:30 GMT, we have three basic scenarios. One that I think is already priced into markets. The Draghi will hint about more action in December, but without details, allowing the market to believe that it's only extending QE beyond September 2016, and that could support the euro a bit. I think that's a bit priced in. Two more scenarios. One that he hints also about increasing the size of QE or even changing the deposit rate. I think it's a long shot, but anyway, if he hints about printing more money, that's very euro negative. It could send the pair to 111, 110 even. And if we have an optimistic Draghi, we could see a challenge of 115. All in all, I think the base case is what's priced in, is for no change over. So hints about more action, but nothing too specific, leaves the market guessing. We also have jobless claims in the United States and Canadian retail sales. Both are important, of course, for dollar CAD, and the two existing home sales in the United States. Euro dollar is approaching this event a bit in lower ground, 113.10. Support is 112.90, 112.15. Resistance 114, 114.60, and 115. We've also seen this morning pound dollar rise all the way to 155 to the upper end of the range. Still no breakout, thanks to superb retail sales, an excellent rise of retail sales all the way to, we had it here, 1.9% month over month and 6.5% year over year. So busy morning, and of course busy because of the things to come later on. Dollar yen that is still close to 120, and the tension continues towards the Bank of Japan's rate decision. Also the Fed next week. So the currency in focus today is, of course, currency pair is, of course, euro dollar. It's falling a bit, and is it anticipating a very dovish action? I think so, but it may be priced in, and once we don't have an extremely dovish move from Draghi, I believe it could bounce back to range. But the general direction, as I see it, of euro dollar remains down. Okay, so good luck everybody today with the ECB, whoever is trading it. We'll be here, of course, tomorrow to digest what we heard from Draghi. Draghi usually provides a good show. This time he's speaking from sunny Malta and not from rainy Frankfurt, so it should be maybe more cheerful. In any case, will be tomorrow as usual to talk about Draghi and to wrap up the last events for the week. So I wish everybody success in their trading and looking forward to see you all tomorrow. And thank you very much for all the questions. As always, that's what makes the show even more interesting. Okay, so thank you very much and see you tomorrow. Bye-bye.